Okay, so if you're new to the workforce in Canada, or maybe just filing taxes for the very first time, there's one thing that can feel, well, a little overwhelming: reporting your income. But don't worry, we're going to break it all down and make it super simple.
Have you ever looked at a tax form and felt like you're trying to read a completely different language? Yeah, you are so not alone. It can feel really intimidating, almost like a secret code you're just supposed to know how to crack.
Well, consider us your official translator. Because honestly, the key to cracking that entire code starts with understanding just one single word: income.
So stick with us for the next few minutes because we're going to show you exactly what counts as income, pull back the curtain on the paper trail the government uses to track it, and, this is the best part, show you how getting it right is your key to unlocking benefits and maybe even a refund.
All right, let's start at the very beginning. What in the world is the government actually talking about when they say income?
It's pretty simple, really. Income is basically any money you earned or received during the year. And I'm not just talking about your salary. It's your tips, any government benefits, and yeah, even the cash you made from that side hustle. It all counts.
Take someone like Malika, for example. She's a food delivery driver. The money she gets paid by the company, that's income. And all those cash tips people hand her at the door? Yep, that's income too. The whole thing.
Okay, so you might be wondering, how does the Canada Revenue Agency, the CRA, even know what I made? Well, it's not magic, I promise. It's actually a really well-organized paper trail.
For most of your earnings, there's this official document called an information slip, or sometimes just a tax slip. The easiest way to think about it, it's like an official receipt for the income you were paid. Here's how that journey works. Your employer pays you throughout the year. Then they send you an information slip. At the very same time, they send an identical copy to the CRA. This creates this perfect little paper trail, so when it's your turn, you just use your slip to fill out your tax return. Everyone is on the same page.
And don't worry, this all follows a pretty clear schedule. After the year ends, your employer has until the end of February to send you these slips. That gives you plenty of time to get everything ready way before the tax deadline.
And hey, what if you worked more than one job, like Elijah here? You're not going to get one big combined slip. Nope, you'll get a separate T4 from each of his two employers. Every job creates its own unique paper trail. Okay, let's do a super quick tour of the most common tax slips you'll probably run into. You don't need to memorize these, just get a little familiar with what they look like.
First up, the big one, the T4. If you are an employee who earns a salary or wages, this is going to be your main tax document.
Your employer sends this one to you, and the magic number you're looking for is in box 14. That's your total employment income from that specific job.
Next is the T4A. Think of this one as a kind of catch-all slip for a whole bunch of other types of income.
You might get a T4A for things like scholarships or payments from an RSP, or maybe some commissions you earn from freelance work. It's really for any income that isn't a regular salary.
So, what about income that doesn't come with a neat little tax slip? This, right here, is where you need to be a little proactive.
See, if you get a tax slip for something, the person or company that paid you has already reported that income. But for any income you get without a slip, like cash tips or money from a side job, it is 100% up to you to keep a record and report it. Let's make this crystal clear with Paula's story. She works at a restaurant and got a T4 slip showing she earned $8,000. Okay, that part is all officially documented. But Paola was also a fantastic server, and she earned a lot of cash tips. Her employer didn't track those, so she kept her own careful record. And over the year, she made an extra $1,000 all in cash. So, and this is the crucial part, when she filed her taxes, she had to report both the $8,000 from her T4 plus the $1,000 she tracked herself. So her total income to report was $9,000. Now we get to the most important question of all. Why go through all this trouble? I know it feels like it's just about paying taxes, but believe me, that is only half the story. In fact, let's just flip the script for a second. What if you made $0 last year? Should you even bother filing a tax return?
The answer is a huge, resounding yes. You should absolutely still file. Filing your tax return, even with no income, is how you unlock the whole system. It's how you can get a potential tax refund, how you qualify for benefit payments like the GST/HST credit, and how you start building up contribution room for an RRSP down the road. And for students, it's how you claim your tuition credits.
So the next time you think about taxes, try to see it a little differently.
Filing your return isn't just about figuring out what you owe the government. It is your official application for all the benefits, credits, and refunds you might be entitled to get back. It's not just a duty, it's an opportunity.